Hello, it's Brian Shannon from alphatrends.net. Today's Thursday, the 29th of January, 2009. I didn't give a stock update yesterday, but wanted to follow up on some of these previously mentioned stocks. And again, we're still in a primary downtrend with this market, and we're back to a critical level here. See the earlier video for more about that. But we're in a trading market. The primary trend on the daily time frame is really kind of turning more neutral, but of course the weekly time frame, we're still in the throes of a horrible bear market. So you've got to be very quick to take partial profits, at least on a lot of these moves, and even quicker to take your losses. On Wednesday's update, I had suggested that again that we continue to watch BEAV for a move above 950. Had you gotten involved in there, I think that probably you should have been out on today's open as it made a lower high here and it's starting to drift back down. So I would say you want to be out of BEAV at this point. No need to continue to watch it right now. MEA, I was saying last time that you will probably want to take advantage of these bounces, and in the early morning strength, that those are good opportunities to get out of the stock. Get out of the positions, that in particular when it drops below that daily VWAP. And here we saw that we'd seen that pattern since getting involved near this 265 level or so, that 3 days in a row it gapped up and then closed near the lows. Yesterday we saw a lower low, and I have to stick by the stop that I had suggested, which was 268. So had you gotten involved there today, the best thing would have been to get out on the open at 266, as that stop was violated. So there's no reason to continue to watch this. Worst case, you should have lost maybe a couple pennies. ROC, here's another stock that I had said the early morning strength is a good time to at least take partial profits. Well, this stock now has been broken. We bought it. I had suggested possible purchases above $8.20. We'd been trying to raise the stop in here, but the last update I think was for a stop just below here. So worst case, you probably should have lost just a little bit in here. Whole Food, WFMI, actually the stop was hitting in that one if you were involved on this day. So yesterday we saw strength and a complete failure in here, which shows you when you're looking at these stocks and it makes a nice run like that, don't get all excited. Instead, what you want to do is manage risk and keep raising your stop up above those higher lows. So no reason to watch Whole Food anymore. It's broken at this point. As far as the short sale candidates, we had gotten involved in ALXN below this level basically, and I had suggested a stop near 36 and change, and then we had lowered it I think to 35.80. That should have been hit on the open here. So had you been involved in ALXN, you should have gotten out immediately and taken a small gain there. The stock still looks vulnerable on longer term time frames, but not quite broken yet, so I'd continue to just keep an eye on that one. Same thing goes with Teva. Teva looked like it was going to break down on Wednesday in here as it broke below that 41.50, but we've seen just a lot of choppy action. The larger level remains that needs to be broken, remains right around that 41.25 or so, 41.25, 41.20. This stock to me still looks like it has the potential to fail big. Bear markets, they get all the stocks is the saying, and this one's held up pretty well, but is looking very vulnerable. Maybe a better candidate for puts. It's up to you to decide how to handle the risk. I had suggested that Amazon was looking weak as well, and we had seen that gap on Tuesday fail to hold. Yesterday it gapped higher again. Had you been involved, there's no reason to hold when they gap up and then they hold on to those gains like this one did yesterday. So no reason to actually Amazon's up in after hours at about $56 a share. So it really, like I said, needed to break below this level for a real give up, and I had warned that you don't want to become complacent as it gets down there. You have to manage risk. So no reason to continue to watch that one for now as a short sale candidate. Some of the stocks that I said were little junk stocks you wanted to keep an eye on. I was suggesting level 3 above $1.20. I still think this is worth watching for a move above $1.20. If you do get involved, I would say worst case stop goes below $1.10. So if it prints 121, then maybe you want to buy it. Put a stop at about $1.09 for about 12 cents loss. So don't go crazy with it, obviously, in terms of dollar amount, because that's a pretty wide percentage stop. But this 30-minute time frame, looking like if it can get going here and then push past this level in particular, then it may go on to test these levels up near $1.50, $1.60. ZGEN, here's another stock that had met our entry parameters, and by moving above 420. And again, in this environment, you got to be quick to take at least partial profits. This thing ran 40 cents immediately, so it made a 10% move. If you're still holding this thing, then I think that you've got to re-examine what trading in a bear market is all about, because if they give you 10% real quick, you really gotta look hard at why would you continue to hold it. So if you're still in this stock, it hasn't hurt you at this point, but I'm going to discontinue updating it, because again, it's just a little junk stock that in a bear market that's getting a little bit of a bounce. You can't really look at it as anything more than that. A couple stocks to continue. Well, HGSI, let me update that one, because HGSI did meet the entry the other day, very briefly getting above $2.20, and wasn't really a convincing breakout, but I'd suggest that if you were holding it, your stop ought to be at about $2.03. So that was violated today. HGSI, nothing going on there. No reason to continue to watch it. I think that maybe coal could get going. A couple of the coal stocks are still looking like they're recovering a little bit in here, and this is the ETF for coal. The symbol is KOL, trying to hold above that 50-day moving average. Obviously, the daily time frame is not bullish. This is just for a trade only. But it broke past some resistance, trying to hold above that 5-day moving average. Really needs to probably clear 1430. So we want to see a little bit more base building in here, and then some strength before getting involved. It's not a buy here. Maybe above $14.30. I think worst case at that point you'd probably want to give it 20-30 cents maximum risk. Another little energy play is this Cameco CCJ. They're involved in uranium, and same thing again. We've still got mixed signals. All these long trade candidates are weak. I'm just finding ideas in case we rally. Here are the potential ones to go. CCJ. Let's look at the 30-minute time frame. You can see it had a nice rally back here, broke down, turned sideways, tried to get going on Thursday. It's come down. It traded some pretty heavy volume here at the end of the day. So I think that basically, if you can see this stock back up above $17.30 or so, maybe you'd want to consider a purchase. Worst case stop down at about $17.05, and if it gets going, well then perhaps it could get up towards at least this $18.50 level. But again, if you get a quick pop in any of these, you want to sell immediately, at least a partial position. When I say quick pop, I'm talking about 2 or 3%, because these rallies come and then they're gone just as quickly. So you've got to be aggressive about managing risk. Another energy play, and just a horrible looking daily chart, is natural gas, UNG. It does tend to get going once in a while when it's above the 5-day moving average. Worst case stop right here, $18.73 or so. That's these highs. What I'd like to see is maybe a bounce, and then a little further pullback, and then a bounce. Let's see, today's, maybe above 1905 or so, and then worst case stop below here. These entry parameters that I'm giving you, they change because the market is dynamic. What you have to do is recognize the definition of trends and enter as the shorter term trend begins to move higher on your long trades, and then let's say it pulls back and finds a higher low at 1905. Well, there's no reason to keep your stop below here still. You have to be super aggressive trading the long side in a bear market. I can't stress that enough. A couple short candidates I had mentioned. VIVO, VIVO, still looks very vulnerable to me, so keep an eye on that one. Worst case stop probably right around here in this stock, near about 2160 or so. Where does the momentum pick up to the downside? Maybe, maybe just a little bit below this level right here, 2130 or so. Worst case stop right up here, 2160. Don't sell short gaps down and say, well, it was below 2130, so I sold it short at 21. If it gaps down to 21, you want to allow it to maybe rally up on light volume, then short it as it starts moving lower with a stop right above here. That way your stop could be maybe 10 cents away. The other stock I wanted to update was Celgene. I told you that I was looking at puts. I bought a very small position in here on Thursday. I had mentioned that on Wednesday rather, ahead of the earnings. I'd mentioned that on Twitter, and it was a bet on earnings. I had bought the February 50 puts. The stock has not come in the way I was hoping it would. I paid $1.40 for these puts. They closed today at $1.20. I think that if it drops down just a little bit, maybe to break even or so, I'm going to get out of this trade. The stock on a weekly and monthly time frames still look vulnerable, but the catalyst I was looking for no longer exists. The trade didn't set up based on an earnings play, so there's no reason to continue to watch it. Manage risk. That's always job number one.